But
So technology is not my friend today. Again,
that is okay.
I'm kind of liking the screen here in this gray mode. It's easier on my brain.
Oh, I bet. Yeah, I bet. You don't need color to do all that. It's fancy. It's the fancy colors that are attractive.
Yeah.
Black and
Distracting.
white is, yeah, black and white would be a lot more, well,
Oh man.
monochrome.
Yeah.
Yeah. Monochrome to me is simple,
Ah, yeah,
and elegant.
yeah. I do prefer black and white photos over color.
Yeah.
It's like going to the mountains in the wintertime where you see the clear definitions of the lines and the rakings through
Yeah.
the wood. Yeah, no, it's yeah. I've had a thought about our neighbors.
Oh.
Yeah, I've I've long wanted to get into drumming,
Hmm.
and so when they start making noise, then I start making noise back.
Yeah. You could do that. Or turn the Sonos up.
Yeah, well, you see, the Sonos would affect um, uh, Sharon because of where
Yeah.
this one is situated. So,
Yeah, it's true.
however, if it was right here beside me on the desk and I could just turn it around and give it to the wall, I would.
Yep. Why don't we come back in the summertime? We'll come back in the summertime. It'll be, nice, beautiful, gentle morning. Their window will be open, and we can just use a chainsaw to cut some metal in front of in the front yard.
In the alleyway. And then
Yeah.
that way we can also bless the assholes across the alleyway who they've been much better lately, but historically have stolen our parking spot.
Yes. Yes, yes. Get revenge on all of them.
And then just leave.
And then just leave.
Oh,
Oh, we'll be already gone.
yeah.
All right. Oops. Now I'm ready, I think. Yep, there we go. Okay, silver prices coming back up, bouncing off of that low. $71 per ounce. Actually went up 25% in a period of that day and a half.
Wow.
Yeah. But this volatility is only going to continue. This would be a great time to buy with the lessened volatility. That's a
Right.
good indicator combination where we have a retracement and a drop in the ATR, especially in such a market. You can't go wrong with buying some more. Just coming back to recovery from here, going back to recovery is 42% from here. 42% up just to recovery. Full length of that recovery is 67%.
Whew.
And we also did an analysis yesterday, very quickly, briefly put out the Fibonacci retracement tool, and the nearest we figure is probably going to be about $160 before we see this kind of pull back again, where we'll see some significant resistance. Yep, that's that 4-hour chart. Things are going to probably, because again, volatility, we'll see things consolidate a little bit, and then we'll see the next impulse. And I don't think we'll be going down. I don't think we'll be going down.
Yeah, I tend to agree.
Gold also is holding a very similar pattern, having dropped not nearly as much. It only dropped 20% in that period of time, already up 12%. Not as volatile, but as we can see, recently volatile. Gold silver ratio hanging out around 60 ounces. Today, 58. This one here, we're waiting to see that, come down into the 15 ounces range. And my recommendation for people is to take their silver and, start dollar cost averaging your conversion into gold. So that's where you want to have a nice, good relationship with your local dealer and say, hey, I got some silver. Can I please trade it for gold? Because after this, you know that you can't really get gold at a better price. Because
so at that top curve along that, no, up there. What is that ratio?
That's 24.
Okay.
This is 22. Now, this squiggle here, I really didn't, there's no rhyme or reason to these squiggles here.
Okay.
This squiggle down at the bottom is more so what I see happening, where it'll have some velocity and even go down beyond 10. And then it'll probably equalize around 15 to 10, somewhere in there.
Mm.
These squiggles here, there's no telling how that will go. There really isn't. I mean, this is a very, just in the way that this chart moves, you can see it doesn't have the same type of movement as other types of charts, where the lines aren't, they just don't form the same way. There's a little bit of a different feel to how this chart moves. So as a result, we don't really know what the squiggly lines are going to be. In fact, when we look at this, there's some support and resistance, but it's not always consistent.
Right.
So, there very well may be some, like right now we seem to be at a point of resistance. But this chart does behave. I dropped. I fell. Help! I've fallen and I can't get up.
You're fine.
Okay, good.
I think it was the first kicking in, actually.
Oh yeah. But this is it, right? We always have an exit strategy. Yes, it's wonderful to sell silver at $400 an ounce. But then what are the dollars doing for you? Nothing. In fact, they're getting worse. That will be the case. So the exit strategy for silver is commonly gold, or you're using the silver to, get your groceries and food and stuff like that, especially from local merchants. Because that's just how it ends up becoming in times such as we see. Moving on to the US 30, we see here on the 4-hour chart that we're really just consolidating here at that very all-time high. It is important to note that that kind of momentum does peter out before a drop. We had the same type of thing happen in this. This is on the daily chart, but in the 4-hour chart, in this area here, there was a good week where it just butted up against that all-time high. It wasn't continuing onward. And so now here we are butting up against that all-time high for 30 days.
Is that a long time for that to be doing that? 30 days?
It can consolidate across 30 days. It's done it before, but not up against an all-time high. When that happens, here's the all-time high. This was January 20th, butted up against that for 39 days. It's just usually when we see here, right? This was across 60 days, these two highs before that drop in April. But now we're butting up against this. This is a long time for that price to have little variance. It can happen. It can happen. But given the fact that we are so far, two reasons. Number one, we are so far above recovery right? We're 10% into accumulation in a very short period of time, 147 days. That is a fast growth rate. Yeah, we had a little bit more than that here, but this was recovery. When it comes to accumulation, that's a pretty good push. You know, when we see it happen, when it happens quickly, it's usually in recovery that it happens that fast. Here, this rise, 14%, and it's consolidating for a solid week here. We don't see that. You know, when it comes up, it usually just goes back down again. We don't see a lot of consolidations at those all-time highs, except right before a nice big fall. But who knows? Might just continue going up because the war machine continues to move. Going into cryptos, Bitcoin dominance still consolidating inside this wedge, finer and finer all the time. You know, last time we were actually outside of that was back in November, where we jumped up and ducked back inside that 60% threshold. Very telling to see when alt season will come into effect. And yeah, just see here. Ian says that he's got 3 windows open and none of them are working for him. Here, let me just see if this will work. I don't get why he's having such a difficult time connecting nowadays.
Well, the one that I had difficulty with earlier, the last 4 characters are J Victor 34, and the one that I got in on ends in Nancy Fred Niner Tom.
Yeah, well, the Victor 34. Yep, that one there is the consult room.
Okay.
Consulting room. And you can get into that as well. Oh, here's Ian. Hello, sir.
So I must have 4 different rooms. The one first one I went into was the one that ends in 34 on the Earl.
Okay. That one is the consulting room,
then,
yeah.
And then I went into the one that ends in 9T, which is this one.
Yeah.
And then I went into the consult room as well. So I had all 3 of them up on my screen. Nobody was there.
And nothing was showing.
Nope.
Craziness. That's the second day in a row you've had a difficult time connecting.
Well, no, this time I got in. You know, they showed I was waiting in the back room.
Okay.
But normally they show that somebody's there.
Right, yeah. Oh, so you're saying that when you've been there before, like recently, you were in the room, you were able to connect to the room, but you saw nothing.
Yeah, exactly. Just a black screen.
Wow.
Yeah, that's what I experienced also.
So that happened.
Okay, so it's not just you. Okay, all right. Well, I'll keep an eye on this and be watching StreamYard for updates, or I'll be keeping StreamYard up to date if that happens again. I want to be able to pinpoint that.
So what is that one you got pinned at the top of the Next Gen Merchants? It ends in P4.
The P4, I think that one, let me just go double check here. I think that one is the private room that I created. Yeah, the 2P4 is the private room that I created for Next Gen Merchants. Now that one is going to be where we do like the co-work when we're doing the Thursday, just because we had people coming to market analysis and wanting to stay for co-work.
Yeah.
So I created a separate room for that. Yeah, and then this one here is the ending in F9T. This one here is the mastermind room, I call it, or the classroom. And then the ending in 34, that one I use for private consults because I've got a different setting in there to prevent other people from coming in when I'm meeting with people.
Sure. Okay.
Yeah, it is a little confusing, and I want to find a way to make that more streamlined so that people know exactly which button to push or which link to go to.
Yep, correct.
Come back to here. Okay. So this one here, Bitcoin with gold, we seem to be accelerating our way downward again, with gold prices that rallied back from their dip over the weekend, and Bitcoin prices not going up. We are seeing another drop.
Yeah,
It's
it's the
getting
lowest
cheaper
place
and
it's
cheaper.
been for a long time.
What's that?
The lowest place it's been for a long time.
Yeah, last time it was here was October 2023.
Oh, I've got November 24.
November 24. November 24 on my chart shows that it's 32 ounces.
BTC USDT. Huh.
But this again,
you're
this
on the
is
gold
Bitcoin
one.
again. Yeah,
Sorry, you're on
Bitcoin
the
against
gold.
gold.
Sorry. My bad.
Yep. Oh, no worries. But going back, if we were to look at this here, yeah. April 2025 was when we were last this low. Before that, it was right after the election in 2024.
Yep. Wow.
So we are definitely at market structure right now. This is as deep of a retracement as we can go without having an official reversal. So here's how this can play out one way or the other. It'll go up or down. Probably see some consolidation here until we get another announcement of some sort, whether it's war or the threat of war. Wars and the rumors of wars. This here can go... Yeah, let's zoom out a little bit more. We will see if it's not holding. We will likely see another... I need to move these. I need to move my lines. Let's grab that. There we go. So right now, the next market structure that I would be watching for is probably, and I say market structure, I'm just looking at the next pivot point. And here we can see these highs started to come down. And so those are not pivot points, but I do see where the red line is now. I see a common point here, both as resistance and support throughout this period of time. So I'm going to call that the next point of support in this price action. Going down, we can use the other pivot points as markers where we may experience some price action switching around. But that bottom now is going to, I'm saying that next bottom is likely where we will go if we do not maintain this line. If we maintain this line, we will likely spring up and start challenging these old lines around 85,000. And that's about it there for that adjustment. So very, very deep in the retracement. I do have this long-term line here, this rectangle, kind of a light blue rectangle. I have that extended across just as a reminder that those were the highs of 2024. So that's a significant level. If we dip below that, we're probably going to be retracing a little bit further. And what that would mean is that we were not on our way to serve a D. If we don't keep this level, then D maintains itself here. and we have to move everything back. And the official market structure would become this. Nope, sorry. Yep. This is
Would it be
this
that
is
upside down?
critical level. Yeah, so if it goes down, then we would be tracing. You're absolutely right. If it goes down below, then we would be looking for this and we'd be wondering where's C. C would be technically here. Yeah, if this is, this is a short term. If we were looked at this in the very short term, it would be A, B, C here. But we're not quite below that C yet. So this is still all potential.
Sure.
Technically, this is a D. If we look at it from this perspective here, if we look at it from a completed trend, we have this A, B, C, and then D on the extension. It's if we can't hold C, then we're simply tracking C from here.
Is that the Elliott, what you call an Elliott wave?
That's right. Yep.
Yep.
Waiting for that fourth impulse. So we haven't actually broken the trend yet, although it has dropped from its all-time high back in October 2025, dropped 41%. And think of it this way. That's a 40% drop in price. That's what's constituted, and this is how markets typically work. That's what's constituted this ratio to drop because gold is gaining. So very, very fascinating correlation, how literally it does appear that to me, as I watch this occur, it does appear to me that they are extracting gold and they're going to exchange it for Bitcoin. They got to fund that Tower of Babel somehow. The Great Tower. If you ever want to look into the emotionality or the a vivid, I would say, very crystal clear picture that is even visceral emotionally, Project 86 is a band, a musical group, and they have 2 albums out now called Omni, OMNI, and that's referencing the Omnicorp, the one world government, the one world company. The another example of this is in the Pixar film WALL-E, where there is that company that owns everything, and it's called By and Large. The same type of thing. And I think that, yeah, gold is being transferred. Again, if you think about it, these old chips, these old technologies, they're going by the wayside, and the demand for gold will plummet once those new chips come out online. And so this is a rug pull. Even the gold, as much as it is such a staple of value and still will be, I think that what we're seeing is a ramping up, and it's not like I make it sound like I know all kinds of stuff, and I'm a walking encyclopedia on this kind of thinking, but I'm not. I'm simply thinking the same way that the elites are thinking. They don't go through this type of movement. Like, look at how this was just button up against the top, May, June, July, all the way into August, button up against. And then all of a sudden it takes off. They have a nice retracement, takes off again, comes and retraces back all the way to B. This doesn't happen by accident. This sell off where they took the futures and they flooded the market, that worked very, very well. So this is a rug pull. This is not natural. Yes, gold and silver both naturally have a storehouse of value. But this is getting just as played. People are seeing this, and what we're going to see is an increase of demand for gold and silver simply because they're continuing to buy those chips deliberately. They're pulling an Enron. It's all happening in slow motion. Because all of this digital focus, all of this focus on gold and silver as the means to secure our digital future is being made obsolete, and I am not the only one that knows that.
So then long
Those
term, it's not great to hold the metals.
No, that's why you need an exit strategy all the time. You always must have an exit strategy. Whenever you see this kind of volatility, it's not natural. It is contrived. So always have an exit strategy for every time there is this kind of volatility. Look at this. Look at, if we go back in time, I'm going to go to the weekly chart here so that we can see. Starting April 2025, we became more volatile than we had ever been. The most volatile we ever the most volatile we were prior was September 2011. That was the last time we were this volatile, and we haven't looked back. Look at this volatility just going crazy. This demands an exit strategy. Do not get this is the saying. This is something that I live by. It's better to be outside of the market wishing you were in than being inside the market wishing you were out. Always have an exit strategy. And for me, the exit strategy that I recommend is watching the ratio of gold and silver. This will give us a far clearer indication of when to exit out of metals. And I believe it should be in 2 phases. The first phase is to have a good relationship with your dealer. Take your silver and you tell them down at the bottom, you make a deal. Say, look, I've got X amount of silver. How many ounces do I have to give you to get an ounce of gold? Straight cross. Don't change it into Canadian and then buy gold. Make a deal. Turn it into gold and then wait a little longer, because the next marker, the next indicator that you need to be paying attention to is the interest rates. When the interest rates are going sky high, real estate's going to drop. And that's when people go into what they call the distressed property. And in real estate, whenever you have an opportunity to purchase distressed property, you do your best to honor the one who's losing out. And the best way that you can do that is by giving them some gold. They will love it.
Do you think that once the gold-silver ratio drops to that low point, that it's going to go back up to 50-1 or?
Yeah, it really depends on whether or not the people allow Wall Street to continue to exist.
Yeah, and the only reason it is as high now is because of the manipulation.
That's right.
Okay.
Yeah. Yeah, they flooded. I think they did something like 25x on the futures that they sold. It's just obscene. Obscene. What? You're telling me that fake contracts, pieces of paper, are capable of influencing the price of gold and silver? You can't display your manipulation much more clearly than that. Oh, so when you sell those fake contracts, you can actually affect the price. Yeah, no, we should not be allowing such a thing to be like, what? We get to lie and get away with it? You know, this is why when you go and print money in your basement, you get arrested. It's because they can't stand competition. This consolidation at the top here, we've been seeing this occur now for a straight week. Oh, I got that happening. That happens so strangely and without explanation. Look at this pattern here. You can see the volatility going up and down, up and down. Like, look at this. Now, this happens typically when we see the 4-hour chart. It happens typically. But what we're seeing doesn't typically happen in the sense that here you can see go up and down and up and down, and we might consolidate for a little bit. Here's a consolidation. That lasted 20 days, but then it just continued going up. Retracement, going up, retracement, going up. It goes around, but this area here is a very tight consolidation. Most it's moved is up and down 2.6%, going down 2.6%, going up 2.69. This is a precarious pattern, especially when we're in so far above accumulation. Accumulation's already 10% above this drop here, right? Remember how this happened? Tariffs came in, prices went crazy down. Down 18%, and then, mysteriously, because Trump is such a wonderful guy, look at that. In 299 days, he's brought it back up 35%. But this here, for how far that accumulation has gone, this is just waiting for a disaster. We've had that kind of consolidation in the past. There's no question. I'm on the daily chart, yeah. So in the past, we've had periods of time where it's consolidated that long, but it has not been so far into accumulation. It typically only happens in recovery or in consolidation, but we are consolidating at the very top, very top of this accumulation. That's dangerous. Precarious, I should say. It's like teetering. It's better for confirmation of continuation. It's better to see higher highs and higher lows in accumulation. Once you see consolidation inside accumulation, hold. If I was a trader, I definitely would have been trading this because it was accumulation. But I would have stopped once I saw consolidation. And hold it. And even this accumulation, I wouldn't be risking everything. Probably only be risking about half of what I normally would trade. Remember, the money is made in recovery. So when it goes down, that's when dollar cost average, you ride it back up to here, 20%. Take your profit, call it good. Oh, and now my camera's frozen. Can people still hear me?
Yes.
Yep.
Okay, and it's slow.
So do you use your prime indicator as the ATR?
When we're in this type of market, yeah, the ATR is going to be the most helpful for me, especially with like the gold and silver. The US 30, the ATR is going to go up when it drops. But right now, in the markets that we're anticipating being bullish on silver and gold, I will. The ATR is incredibly helpful to see where that nice exit is. If it wasn't trending, so when you have, let's say for instance on a daily chart, you might see a trend, but when you zoom in on a 15-minute chart, it's like, well, it's trending, but it's against the daily. When that occurs, I use a different tool. I don't use the ATR. I use the ATR to determine how far my stops should be. but I don't use the ATR in terms of, you know, when should I exit. It's and that might seem like a contradiction, but it's not. Do you want me to cover this as a lesson? I can. It's not. It is good. It's important, but it's going to be more technical.
Yeah, you don't
When
have to do
you're
it right now. It would be nice though down the road.
Okay. All right. In short, I can do it shortly. In short, what we're looking for when we're positioning trades, when we're using the ATR to determine stops, what we do is that we say, okay, based off of the ATR, I want my stop to be 1.5 times beyond the length of that ATR. So that way, if there's some volatility, I'm not just automatically stopped, right? I want to make sure that I've got room, 1.5 times more room than there is volatility. So that's how I use the ATR when positioning a trade. I use the ATR to determine the exit after we see, like, this is long-term trading, right? Like here, no, this is a crash, right? And so if I was in a trade, let's say I was really smart and I knew to short right here, I would short and then I would exit as soon as that ATR started to drop, knowing that the likelihood of coming back is a lot higher. I'm not going to hit the bottom, but I'll definitely, when it comes out and that starts to drop again, I'll be selling here. That's good. You know, it's the risk. The further down you try to nab that trade, the more risk you're taking on. But 9% across 60 days on the stock market, if you can maintain that, you're probably going to get $300,000 a month in retainer just to trade, just to push buttons for another company. So I use my ATR, that drop, as a signal to get out of my trade. Those are the two forms that I'll use the ATR. Right now, my focus with the ATR is not so much trying to create a stop because I'm not doing any leverage trading on these assets. If I was doing leverage trading, yeah, I'd be setting up stops and all that stuff and doing money management, which is probably the biggest part of doing trading, risk management. But here, I'm only going to use the ATR as an indicator for when to sell. Already, we're seeing the ATR on the daily chart. We're seeing it peter out, actually. If we look at it here, let's go. It's 98. It's 9.6, 9.8, and now it goes down to 9.4. On the very, very small, way over here is where this here is where I'm looking. That's the number that is plotted on the line. So when I put my mouse over top, you can see that number change. And so today, there is actually a drop. It is now 10.945. The day before, yesterday, it was 9.8. So technically, this would be a great spot to sell because that ATR dropped. The exception is we're just getting started. Because we're just getting started, I'm going to be watching for ATR dropping and combine that with gold silver ratio in that zone. And I would say, you know, if you wanted to dollar cost average your way into this, sell a little bit at 20, a little bit more at 15, and then the rest at 10. And you've dollar cost averaged your way into gold at that point. Well, again, that's if you want that strategy. The other option is here. It would be advantageous, especially if things go the way that I think they're going to go over the next, I would say, after the next year to 2 years. The rest of Trump's term is going to be telling. But that after that, I think there's going to be incredible abundance. I think it's going to be a very, very strong market. Whether or not gold and silver are still manipulated or not, I don't know, because who knows? I mean, the demand is going to drop to virtually nothing compared to what it has been, simply because of the materials needed for these computer chips. That's changing.
So what materials are these computer chips being made from?
Nanotechnology.
But what substance? Graphite, graphene?
There's crystal. There's graphene. You can do it with, we've talked about this in the past. You can burn down hemp to it, carbon, and you can solder it all together and make a wiring. So there's going to be, and that's all nanotechnology. And so we're going to see, go ahead.
That says to me that whatever these chips are potentially going to be made from, and that's the area that one should focus on for the next move, whatever you want to call it.
I'm of the mind that robotics are actually the way to go. Because what's going to happen with nanotechnology, especially with you combine AI and technology and quantum computing, just take those three things, and you project out the rate at which we have seen AI. Remember, we are at like 1996 in the internet right now with AI. If you project back outwards, say 5 years, 10 years from now, and you take just those three fields, those three industrial complexes, nanotechnology, AI, and quantum computing. Now, quantum computing is it's the common term, but we've used this term in the past. It's probabilistic computing. And that's signifying a different type of chip. So it's not deterministic computing. It's probabilistic. You combine those three things, and you are going to see people with 3D printers in their garages, and they can build anything you want. And so since that's the direction that this nanotechnology is going, I would say robotics would be the most advantageous opportunity, because it doesn't matter what that 3D printer is doing. It's going to need to, it doesn't matter what material it's using. It doesn't matter what the end result is. You could be printing a flying car, I don't know, but that it's going to be the robotics that make that printer do this, right? So for me, I'm looking at robotics over the next 2 to 5 years as being a foundation for the 20, 30-year projection. Does that help answer? Because yeah, I'm in agreement with you. And then there's take it the next level up.
So like a dual phase projection.
Yeah. That's a more macro dual phase, but we've talked about this, how I think AI is going to be a phase, but then gaming is going to be it's going to be like springboarded off of that. And that bubble itself is just going to be, dwarfed by the rebound of the gaming industry taking off.
Mm-hmm.
Like
I can see
already our minds are blown when we look at people who are going to trade shows, and we can see them come out of those VR headsets all starry-eyed. You've seen nothing yet. We're just at the beginning of the age of the internet in comparison. I think that there's going to be probably 5-6 years, and people will be building houses with a room like a holodeck, where you get to experience. It's not necessarily a holodeck where you get to walk wherever you want, but already there is a 360-degree treadmill that exists, and you can go and play games where you're running through with guns, and all around you are panel displays. Well, just think about where that will go. Look at watch any episode of or any of the tech-loaded episodes from Black Mirror. People are literally living in a cubicle, like 15-minute city-style pack 'em and stack 'em apartments, and their apartments don't even have windows. They have screens that project the outside. through a digital window. That's where it's going to be. People are going to have rooms in their homes where they go and video game, and it is an completely immersive environment because they can do that. It's easy. They can do that with 3 different There are race cars. If you go to an arcade, if you go to a fancy arcade like the Rec Room down in South Edmonton Common, you can sit in a race car seat with a race car steering wheel, race car gas pedal, clutch, everything. You can shift manually. And there are 3 displays. The first display is you looking out the windshield. The other displays are looking out the sides. And you can have, it's probably about, I would say, it's not 180-degree field of view, but probably like 145.
All the simulators that they use for airline pilots and fighter pilots and all that kind of stuff that's all about. And of course, they're taking what is used in a very, very highly monetized industry and transferring that to your living room.
Yep, totally. Or your den. Now you just, I think that there are going to be people with houses. I mean, one of the other technologies that's been theorized because of the OLED display, which is the organic material that they're able to have light up in TVs, that with nanotechnology, you will have a wooden table in a restaurant. And when you sit down, the smart, your smartphone, which isn't going to look like a phone at all when this happens, I think there's just going to be like chips in the heads and people just talk to each other. But that you'll sit down at the restaurant and it'll be a wooden table, nice, beautiful oak table. And when you sit down, that table's surface, which, will probably appear like a lacquer or something like that, maybe a stain, it'll transform into a screen that you can interact with because the nanotechnology itself simply shifts phase. You can do that. They've been able to switch the phase of nanomaterial from one phase into another where it has 2 different properties, same material. So we've got so much craziness ahead of us. I could be totally off with this stuff. There's another entire possibility that out of an emergency, all of the world renegotiates their energy contracts just to pull the pin on the dollar once and for all and put the nail in the coffin of the American empire war machine. That looms anytime. And if that were to occur, great. Now we have less of that, monstrosity of a war machine able to continue because all the energy contracts would be renegotiated. I can't believe it hasn't already happened. And when it does, who knows what'll happen in gold and silver prices because we're all sitting here looking at it in comparison to the funny money known as the dollar.
I think everybody's afraid to pull that trigger because the potential. If you're first out the gate, that's one thing. But if you're 10th or 20th or 50th, man, the effect on your economy is going to be massive. And the one that's the first out of the gate knows that. And the consequence of being first out of the gate and knowing that pulling of the trigger drive multiple economies into the ground is a domino effect. It'll come back to bite you in the butt. So I think they're afraid of that, afraid to pull that trigger. It's almost like it has to happen at the equivalent of a Davos, our United Nations level event.
Yep.
It's not going to happen individually, I don't think.
I concur. But I think it will happen eventually because it'll be a necessity.
Or they just might say, well, let's just stick with the status quo.
Yep.
What's the likelihood of that happening? In other words, the dollar being less of value. Well, if we say, well, the dollar is 1/100th of what it was 100 years ago, that's as of from then until now. Well, if we go tomorrow, from then until now is then until tomorrow. If we go a year from now, then until now is a year from then until a year from now. So it might be 1/200th of what it was 101 years ago.
Yeah.
They just use that as the measuring stick and stick with it. They could do that.
Yep.
What is the likelihood that they would?
It would require other nations to want to do business with them.
Well, I think everything is, people still think in terms of dollars when they think of valuation. I'm just in communication with some people, a couple of guys right now, about changing our mindset. And you're the one that's really got me into this. Changing our mindset from thinking in terms of dollar value to something else.
Mm-hmm.
And what is that something else? When we think of silver and gold in terms of their value, we think in terms of dollars. We don't think in terms of what? Trees?
Yep.
Cows? Sheep?
Mm-hmm.
We don't think in terms of that.
The more and more as I contemplate this, it's the life force energy. How much of my life did it take to get a cup of coffee, to go out into the forest and collect the things necessary for my products, for the production of those products, the advertising, the cleanup, the this, all the little details. Essentially, it's my life force energy. And how do I monetize that? How do I put a number on that that reflects its true value? And if I do that in dollars, well, then I'm constantly devaluing myself. And yet, as you say, we don't yet have something that we can come to an agreement on. Yes, the example of the pierogies and tea, that's an example of an exchange, but not everybody wants my tea, and I can't pay for my utilities or my rent with tea. Likewise, I'm sure the other vendor couldn't pay her mortgage or utilities with pierogies. So it's somehow coming to a common agreement that I think you had mentioned bartersomething.com a while back, and I think that's a lovely idea. It's still, how do I pay my rent with this? That level of practicality. How do I put fuel into my vehicle so I can get to Edmonton?
Yeah, barter pay and barter it. Yes, they are. They are the two organizations, sister organizations, but they're both separate. It's the problem there, and I won't. I'm very much behind barter pay and barter it. My concern is the centralization of the whole thing. Everything is focused on from a central location. I would much prefer a decentralized, distributed approach, and I'm talking to them about that. They have, as I mentioned to Paul the other day, they have avoided the blockchain question because they don't want their barter credits and barter bits to be considered a currency, which the more you get into the cryptocurrency world, the more governments and regulators are viewing them as currency. And, you got to deal with the anti-money laundering issue. You got to deal with, all the KYC, etc. And they're not doing that at barter pay or barter it. There's no KYC or AML stuff at all. It's just, these are just tokens.
Yeah.
But they're not on the blockchain.
Working with that kind of groups and mindset, I think would benefit me, or at least just to dip into the sites, would benefit me in beginning to comprehend how other people value their time and their lives. What that looks like, because I know that's what I've done in massage. When I started in massage, the going rate was $50 an hour, and that was, oh my gosh, it was so much. Now it's anywhere from 100 to 150 an hour,
Yep.
depending on what you can get.
Yep.
So again, I think going onto those kinds of sites and interacting with people to see, okay, so how do you do this transaction in an equitable way?
Well, I'll put my referral link into the chat for both of those, barter pay and barter. Is that okay, Paul?
Oh yeah, of course.
Yeah. Okay. Well, I mean, they're unrelated, but that's why I ask. That's
Oh yeah, no.
Oh,
That's good.
are you putting it into Telegram?
yeah. I'll put it into Telegram, and you can
Thank you.
pursue it from there.
Thank you. Because we haven't
Yeah,
been taught from our shortness, our value. We have no idea the preciousness of this and this experience. And so we are defaulted to the fiat currency of our country, of our
Yep.
culture. And
even
go ahead.
Oh, I was just going to say, even that programming extended into identifying ourselves as their property in order to get a job. I remember I was like 13, 14 years old, and my parents were like, "You got to get a social insurance number if you need to get a job. Better get that now." It's not just a programming of a devaluing yourself, but a programming to identify yourself as someone else's property.
Well, when my children were small, we were encouraged to get their social insurance number so for the tax benefits,
Yep.
the education fund benefits, right? Not knowing that this was not a great idea.
In the internet, we call that a honeypot.
Yeah. Lots of those.
Mm. Yeah. Anything else anybody seen in the news at all? Maybe I know I don't know if I mentioned it. I think I talked about it yesterday, but I think it was just over the weekend. Trump was, that's one of the reasons why there was a little bit of a panic in some of the metal markets, because people were selling off. And Trump was very, very proud of the fact that the day after Melania's movie came out, because that was the most important, he said it was the most important event of the century.
Oh, sure.
Melania's movie that came out. In fact, he went to go see it twice. But there was also reports that at the Boston theater, nobody showed up at the premiere.
Oh, wow.
That's why he had to go twice. So his security entourage would fill the theater.
Right? Look at how packed it was. It was the whole White House. No, but he was talking about... Oh, go ahead.
You went to keep your job.
Yes. So, after the most important event of the century, he threw an armada together, and he was very proud of the fact that this armada was way bigger than the one that they sent to Venezuela, but it's on its way to Iran, and they're negotiating on the way. And he says, we'll see what happens when we get there.
That's not negotiating.
That's not negotiating. No, that's called, I'm going to be a bully and be proud of it. And where was I going with that? Oh, yeah. Well, and that's why I think that even though we saw a drop in every other market, the stock market has maintained itself. And it hasn't fallen already, simply because gold is attractive to foreign investors. And that increases the perception of value in the dollar.
Well, I think that what Trump is doing is in fact negotiation, not diplomacy.
Right.
Diplomacy, he would not have sent the the armada. But negotiation, he's done that throughout his entire business career.
Yeah.
We don't know what strategies he used because all of that was done behind closed doors. But we're seeing it up front and center because it is front and center on the world stage. He's sending an armada to Iran and saying, we're on our way, what would you like to do? It's all part of the arm twisting and all part of the whatever's, he's putting it all on the table. And so his approach, that's always been his approach, not to be a diplomat, but to negotiate.
Yeah.
And as the president of the United States, this is how he negotiates.
Yes. Yep.
Does he have the right to do
walking, basically brandishing a baseball bat, tapping his hand on his way to the talk.
Yeah, sure. It's very much like a mob guy walking into your, street vendor store and with the baseball bat, as you put it, and saying, we'd like you to come under our protection.
Yep.
That's really nice. Thank you for the offer.
What do you think?
Yeah. What do you say? Do we have a deal?
I think if I say no, it's going to hurt a lot.
Well, I mean, the only way to do that is to be able to negotiate with a bigger bat, really.
Yep. Oh, yeah.
That's what it comes down to.
That just, especially for Iran, that might just look like China.
Ooh.
China, remember, Iran in 2014 agreed to a $600 billion infrastructure project to build the Silk Road, their portion of the Silk Road.
Into China.
Yep.
Yep.
And so China is definitely very, very interested in maintaining that ally. And Iran, all they would have to do, well, two things. Number one, a lot of people don't know this, but in the mid-2000s, Russia and Iran had very good relations. And Russia gave them a complement of missile technology that Iran innovated with their own. And they were saying, I think it was like 2004, 2005, saying that the US could send their famous Tomahawk missile and Iran would not be scared.
Ooh.
They could intercept supersonic missiles. That's not many militaries can do that. And that was Russia that gave it to them. There has been, I remember when that happened and how much Iran was already in the news as enemy number one at the time. The media loved that. And I remember in the online calls that I attended, where a bunch of us were talking about this kind of thing, they were saying, man, they better not piss off Iran too much, because Russia also has tons of energy deals with Iran. And that if Iran were to be provoked, their allies would not have any problem coming to their defense. And you think the US military is amazing? Let's just go back to a time, I think this was again early 2000s, or maybe it was later 2000s. There was a US battleship that went off course and they didn't even know it until like a week later. They had to explain themselves, and they had to tell the truth, because China was the one to actually disrupt their GPS systems. And all of the sailors were sailing blind, thinking they were going one way and they were not. And it was as a joke, because China was like, hey, let's just see if we can do it. And they did it. The test was successful, and the US battleship was cruising around the southwestern Asian waters basically without a rudder. So the US does not have a superior military they've been boasting about. if they went up against Iran legitimately, that would definitely result in mass cataclysmic losses for the US military. They can't go up against the Chinese military, as much as the China economy is in rubbles as much as everybody else. The Chinese military alone would not, they wouldn't even flinch at squashing the US military. But you add Russia to the mix, honestly, I think that what's going on, it's a display. Whether or not war actually breaks out, who will ever know? With the way that the videos are now so projected, we have no way of knowing. I really take a look at what happened with Venezuela. Trump said right after the attacks, the day after the attacks, we made it dark. He said, we have a technology, we could make it dark. Yeah, you sure did. All of the violence, torture, inhumanity that for the last 3-4 years has come out of Gaza, for example, or the rape gangs in Europe. We have footage of it all. But we don't have any footage of this invasion of Venezuela other than the capture of the leader. And he's wearing 4 different outfits in 18 hours.
Fashion.
Where is there an armada going to Iran? Has anybody actually checked? I'm not saying that didn't, but just because Trump says it and just because there's an internet that says it is, that does not confirm it to be true.
We almost need to have people that we know and all over the planet who can verify these details.
Wouldn't it be nice if we had a decentralized social media platform?
You got to have the satellite technology and access in order to make that determination yourself. And we don't have that.
Nope. And so the reality TV show continues on episode after episode. Tune in tomorrow to get the latest updates.
Very good.
Very good.
Well, thank you, everybody. That was fun.
Yeah.
Market analysis for Tuesday, February 3rd.
Yeah. Yeah, already crazy. I was going to add a comment about the ATR indicator.
Yeah.
That thing goes up whether the market is going up or down.
Yes.
So the thing is that you don't know whether the market's going to continue going up or continue going down. Because
isn't it the idea to have the flexibility in your program to follow those movements?
Yep. There are a plethora of, I'll share this real briefly. When it comes to trading, the ATR, I only have it up, and I've only put it up maybe about a month ago, I think it was. And when we first talked about it. I only would use it in this capacity when we're in a bull run like we are with gold and silver. When it comes to this is one factor of 6 different factors that I would employ in determining when to trade, when to exit, that kind of thing when it comes to technical trading. So the ATR, yes, it gives us an indication of the volatility. It does not give us an indication of direction. But in conjunction with the ATR, I would also test another strength indicator. And, well, actually, I'll show this. I don't get paid by these guys anymore. Well, at least I don't think I do. And not that that makes much of a difference, but this is another tool that I use. This is called Lux Algo, and there is an update. So I'm going to go ahead and update to the latest version so we can see it in its full color. I started with these guys in version 1. They are now on version 7. So the Lux Algo takes several different strategies and creates a visual representation of the data. And here what you do is that you optimize this so that you have as few number of crossovers as possible. I'm going to take away some of these tools here so we can find what we're actually looking for. So one of the things you'll notice is the color of the candles. I'm going to go to the 4-hour chart so we see a little bit more. You can see the color of the candles changes depending on the volatility. If it's going down, it'll turn a little rusty. If it's going up, it'll be more tan. Can I see? Oh, let's go like this. There. So more tan colored candles, the more bullish it is, and the more rusty candles, the more bearish it is. So what this is nice because when we see times of higher volatility, let's go over here. When we see times of higher volatility, we can see that ATR rising. But then I can see, okay, no, we are actually going below. This is what they're actually doing is that they're using crossing averages to determine when to color the candles. So if I wanted to plot this out with lines, I would use various moving averages of different types to plot these trends visually with color. You can even see there's a little bit of gray here, like it's tan, and then here it turns a little bit gray. Well, that's another indicator that there's a pullback. Well, that's the perfect time to start buying because we've got a trend happening. When it's rusty like that, that's when you know you've got a significant pullback. So then I'm utilizing ATR, trend lines, pivot points. I'm using everything that we've talked about at my disposal to determine the probability of the next direction. And typically speaking, when we see the ATR pull down like this and we have a trend, it is typically going to continue. And so this now, like this here, this is back November. You can see here, ATR went up pretty steep right in this area here. Well, in conjunction with that ATR, this would be where I would say, okay, are we going below this 1980 high, or are we continuing? Knowing the trend, knowing the asset, knowing all of this stuff, it positions me to have more confidence when I push the button and say, yep, we're trading. I kind of went longer than I thought I did, but does that help understand a little bit more about that ATR? Yeah, it's a very basic tool. Not a lot of people use it in the way that I do.
Yeah, you're the first one I've ever heard refer to it.
Yep. It's one thing to measure. Market volatility is a funny thing because you can have a lot of volatility and your ATR stay straight. Because all that means, if the ATR is staying straight and you have a lot of volatility, it means that there's a lot of movement and they are very equally up and down. That's what that means. But when I use this for a volatility meter, I'm getting better data, especially in volatile markets, because there's a trend to them. There's a trend to these spikes in ATR. Let's go to the US 30. This is the 4-hour chart. I'm going to go to the daily. I'm zooming out quite a bit here on the daily chart, but you can see these moments, typically speaking, are only on big drops. We don't see a lot of spikes when it goes up. Even here, look at this. It's going up and up and up and up and up, but the ATR is staying the same. Why? Because it's consistent. And then when it goes in the opposite direction, that's when the ATR jumps up, because it's telling me the length of individual candles. When the candles get bigger, that to me is volatility. This is not volatility, even though it's nice and moving up. That ATR is rising, right? But it's not technically volatile. This is volatility. And whenever I see that, that's a leading indicator for opportunities. Yeah.
It's interesting that when you move your chart to the left, okay, just leave it there for the moment.
Yep.
So you look at just early 2020, that huge jump there,
Mm-hmm.
okay, in the ATR. And
Yep.
you look at 2018 and you see that little blip there on the ATR.
Yeah.
Move your chart to the left, more there, and all of a sudden that blip becomes much, much larger relative to the present.
Yep. 100%. And it's because we can see that scale change. When we get to the higher ones, the scale has to be brought up so that we can see it. And then, it just scales into, relative position. And it is fascinating to watch. It's like it constantly goes up. We're dropping down here. We're dropping down. And now we're going back too far. Now we can't go much more. But even then, before 2012, right? That ATR scale was only up to about 250. But it makes sense because that's the other thing. $250 up against 10,000. Relatively speaking, we're moving just as much in accordance to 48,000. So these are. I love the ATR for that very reason. It gives us a really good idea of what volatility we're actually experiencing at any given time. Far better than most of the volatility tools that are out there.
Now, my only concern with most of these indicators is that what they show after the fact. And
Yes.
of course, I suspect if somebody has created a tool that is predictive, you're never going to see it.
No.
Because they'll just leave it in their back pocket and use it every day and make an absolute killing on it.
Yeah, exactly. Well, I can show you a tool that's actually pretty predictive. Let's go ahead and what do I got to do? IG, I think it is. Here we go. This is the Investors Group client sentiment. Where is open an account to practice the demo? No, they're making me sign up now to see this. No. Please don't tell me that's the case. Oh, here we go. Weekly market and sentiment reports. This is a fascinating chart. If we can hopefully see it here. Oh, it's still just advertising. They're making me sign up for it. There's training signals. Yeah, they're making me sign up. Let's go. Somebody figured out that people search for market sentiment because it is a pretty popular tool. Nah, they are not letting me see that without signing up anymore. Okay, well, I'll have to go and see what I can do for creating an account to get that data. But this one here, it's maybe I wonder if this might have it. Ah, yeah, here we go. But they're not showing the charts. Let's see if maybe I can click on one and open it all the way up. Yeah, no, they're not showing me the chart that I want. Oh, here we go. Yep, this is the one. Okay, that's a little bit different, but we can do this. What is this? This is January. Oh, no, I want more time. Let's go to the daily chart. There we go. Okay. So this is market sentiment. We have here the red spikes. Those are when the short lots have been taken. Green spikes are when long shots have been taken. So, or long lots rather. And what that means is the number of positions taken on exchanges in one direction versus the other. And that means what's the sentiment that the market has? So in this case right here, we can see where it is. I can't really zoom in. Oh, maybe I can if I go like this. Yeah. So here we can see market sentiment is short. So they all think it's going down. What does it do?
It goes up.
While sentiment rises, the price goes up. So more and more positions are taking short, and the price just keeps on going up. The price finally goes down, starts to go down as sentiment drops. And we actually see the price going down as the sentiment, meaning the amount of money that people are positioning. Keep this in mind. We keep thinking, we think of supply and demand, right? That would indicate that if the majority of people thought it was going a specific way and they put their money where their mouth was, that the markets would reflect that. But no, that is not at all what happens. In fact, as the sentiment for bullish positions increases, the price drops. So this is actually more predictive. When we see a drop in sentiment, we see a drop in bullish sentiment, we will likely see bullish movements. When we see a drop in bearish sentiment, we shortly thereafter see, oh yeah, okay, here is where it's actually not that case. So the sentiment goes down. Oh yeah, no. Yeah, so sentiment goes down as the price comes back down. Goes green as the price goes down. So it's always inverse. And this is why it is so important that people really, really grasp how manipulated these markets are. This was Euro USD, the two most traded currencies in the world. Whatever the market says, whatever market thinks is going to happen, the opposite is about to happen. So as sentiment rises, you can be rest assured that when it falls, the market will go along with that. The market will work against the sentiment almost always. Yeah, but I've never seen a major movement on a daily chart where the opposite happens. Let's go on. Look at that. Market sentiment says, no, it's going bearish. We're short. The percentage is incredible. It's like 10 times as much shorts as there are longs right there. And yet the market still goes up. The price still goes up. It doesn't drop again. It actually doesn't do a bearish movement until the bulls have jumped on board. Whatever they think is going to happen, the opposite is going to happen. So this is a way that you can kind of tell what's going to happen in the future, because when you see a spike in sentiment, the opposite will likely be what happens. So then the spike is done and you start to see sentiment drop, go long.
Okay, so if you go back to 2023, that first blip right there on the, no, back up to the triple red. To your right, go to your right, right there.
Yeah.
Okay, so you see three little red mountaintops.
Yep.
Now, when that started, the first one started going down.
And price went up.
Price went up.
Again, even when the sentiment went back up again,
It kept going up.
you can see sentiment went up and the price had two candles going down. Sentiment started to drop. And we see that rise all the way. And then finally, the bears say, we give up. And it went bearish. While the bulls came on board.
Huh. I'm surprised TradingView doesn't have a version of this in their.
Yeah. Yeah, they don't have market sentiment.
Huh.
This was another thing that I would use. This one, not on, like, I wouldn't do this. Like, let's see what it is on a 5-minute. It might, I don't know, but I've never tried doing it on a small scale like this just because it's a different ball game here because you just don't have the length of data to see a pattern. Yep. A little bit different. I wouldn't do it for a scalping strategy. Daily is where I was when I would do daily trades, where you're doing a trade across 15, 16 assets. You're probably doing 1 or 2 trades a day, but you're holding onto those trades for weeks at a time. We would always look at market sentiment. Oh, look, market sentiment says it's super, super bullish. That means we're going down. That's about as predictive as I've ever seen.
Okay.
Thanks for that little extension. That was fun.
Yes. Well, blessing to you both.
Thank you very much.
Oh, I see Audrey's already jumped off.
Yeah, I'm not even sure when she did that.
Okay.
But wonderful. Have a good rest of the day.
You too, Paul. We'll see you.
Yeah. Take care.